If investing is a personal hobby of mine, like football, then I can tell people the one most important thing about managing stocks is to not lose the possession. Don't buy or sell based on your emotions or change your investment in stocks just because they are going down. Set a certain amount in an investment, which we call an allocation, and then stick with it in good times and in bad. When you adjust your assets, adjust them based on your expected rate of return and your needs for the future. Your expected rate of return is how much you reasonably expect to earn on an annual basis. Let's talk about what the stock market as a whole has returned in the past 60 years. Since 1966, the S&P 500, a group of 500 large stocks, has returned an average of 11% per year. That's a pretty good rate of return, but it hides an important fact. Returns fluctuates a lot. A 1 or 2% move per day is very common, and the markets frequently fall at a sharper rate than they rise. So while gains might average 1% per month for the first 9 months of the year, like in 2018, they could fall 10% during the remainder of the year and bring the markets to flat for the year. The reality is that sometimes you end up with the feeling like you're working for free during the stock market downturns. And that's not unusual. Once you get a portfolio of a similar size to your annual salary, there will be days that you're working for free. For example, if you make $50,000 a year, that means that you earn about $200 per working day. 50,000 divided by, say, 252 working days per year. So a person with $50,000 salary and a $50,000 stock portfolio would lose $500 on a day when the market falls by 1%. That is 50,000 times your 1% loss in the market is 500 down. So you work all day and you're still down $300 at the end of the day. $200 earning as salary minus $500 in an investment loss means you're out $300 at the end of the day. Unfortunately, this is how stock market works. It's going to feel really bad when the market fall, and you will barely notice when the market rise. But if you can keep the possession of your stock, then on an average, over time, your stock market portfolio should increase by about 11% per year before fees, if you are broadly invested in the overall market. The important thing and the key for a typical investor is to stay focused and keep the possession.